It's the end of the year and you know it. It's the end of 2022 and you know it. The housing market went down and you know it. What's going on, guys? My name is Min Win with What's a Mortgage. Welcome to our channel. Today is a special episode. It is the end of our 2022 session of What's a Mortgage. Hopefully, you've enjoyed us all year long. If you did, do me a huge favor. Please hit the like button. If you watched our episodes all year long and you haven't followed us by now, please hit the follow button. And of course, we're going to bring you still value at the last episode. We're going to break down what happened near the end of 2022 so you can prepare yourself and put on the game plan on how you're going to buy a home in 2023. If it is your goal to buy in 2023, it's going to be easier to predict the market than ever. Okay? With all the signs that are happening, especially everyone knows the feds are artificially hiking rates to bring down prices right now. Doesn't help finance buyers, but you can tell if they're hiking it, they're eventually going to stop hiking and pull back. And when they do, you will know when to buy. Okay, so tonight we are going to share with you the signs and do the breakdown so you know how to prepare to meet your 2023 goals. All right, guys, welcome. So this episode had me thinking. I want to make sure that we put together a strong plan. So we're going to go over what's going on with the news, with different articles, and I'm going to go over the two strategies on how I would buy a home in 2023. Okay? Let me know in the comments below. Are you looking for the lowest price, the lowest rate, the lowest payment, and the most buying power? Let me know. Okay? So what is going to happen? Let's start with the Federal Reserve. Okay? The Federal Reserve have decided on December 14, they are going to hike interest rates by 0.5%. Oh, did rates go up like crazy? No. Even though they hiked the Fed fund rate, which is at 4.5% right now, rates didn't really go crazy because the market has already priced in 0.5%. If they would have hiked it 0.75%, then we probably would have seen a little bit of a rate hike, but we already priced that in. On December 13, of course, inflation came in below 7.7. It came at 7.1. Just understand, as inflation comes down, mortgage rates and mortgage payments will mellow out as well. Will we see, let's say, a payment that was $3,500 drop to $2,500? Most likely that's not going to happen. Okay, it might go from 3,500 to 3,200. You're lucky if you got 3,000, but to go from 2,500 down to 3,500, 3,500 down to 2,500, we most likely won't see that happen. Okay, there might be mild deflation, but not some huge pullback. Okay, so now that we know they're hiking rates, there's another Fed meeting on January 30th to February 1st. They are planning on hiking rates a quarter. So, of course, that's been priced in. But if they go 0.5%, different story. They're going to see what's going to happen in January. So in January, if inflation goes under 7.1%, looks like they're probably going to, after that hike, the feds might take a break, or there are going to be gradual hikes at a quarter. Remember, inflation is still above 2%. So they got to do everything in their power to bring this down. Jerome Powell did say something that I am wrong about. I said eventually inflation will be marked at 5% because right now our wages are at 6%. There's no way they're going to leave that much room or that much money on the table. But Jerome Powell is convinced that they are going to bring inflation down to 2%. What does that mean for you? That means we know there's still rate hikes. As interest rates stay above 6%, prices will come down gradually. For anyone who's waiting to win it big, as long as rates stay above 6%, we will see prices trickle down, okay? But if it trickle down too much, the biggest problem I fear is that cash investors will step back in the market and gobble up these homes, okay? Don't forget, cash buyers, they don't care where rates are at. They care about price. So if price comes down because interest rates stay above 6%, you're going to see cash investors step in and buy these homes. So don't wait too long. Okay. So what's going to happen next? So now let's talk about jobs. And this I was right about, and I knew everybody was lying. When I say everybody, the feds, they lied. They were overestimated U.S. jobs by 1,100,000. That means we don't have many jobs as they thought we did, or that they said we did. So what does that mean? As we hike rates right now, as we hiked rates the last 7 months, or last 7 times the 7 rate hikes, job market is being affected. Because they thought the job market was tight and that they increased unemployment, that's why they were hiking rates so fast. Now that they know that the job market is weakening, on top of these high rates right now, something's going to have to come crumbling down, which is unemployment. So as this happens, eventually the Feds, on top of not hiking rates, they're going to have to pull back on interest rates. So there's one thing, not hiking rates. They're still going to hike it for the next couple of months. Remember, inflation's still above 2%. It's at 7.1. So, but it does tell you, with unemployment going up, and it's going to break the system, and for companies to hire more people, they're going to need rates to pull back. So that tells you, if you're looking to buy sometime middle or end of next year, you're probably going to catch prices at the right price, lower price, and you're going to see rates come down. They were predicting low 5s, high 4s. With this news regarding job market, right? By them lying, and they say they overestimated, but they lied. It's not one. They lied about 1,100,000 jobs. That means how families overall housing. I mean overall the families don't have jobs. Individuals might have multiple jobs, but households might not have that many jobs. So they found that out, and of course they had to tell the truth and say that there's not enough jobs out there. Okay, so we are going to see that happen. But for now, look at new construction. It's being affected right now with new construction. Go over here really quick. Right, with new construction, builders are starting to turn properties into rentals, sell homes to hedge funds and banks, and they're giving more incentives. 62% of builders are giving incentives to bolster home sales. So they're not knocking the price down, they're just giving you more incentives because they need to sell these homes. Interest rates are out of control. Okay? 35% are giving price reduction. And this is why I'm telling you, if you're buying new construction, you need to have your own agent. When you do, it's a lot easier to negotiate, especially if you haven't released all your contingencies yet. Okay? So right now, Feds increase rates, Feds increase rates, so inflation's coming down slowly. Unemployment's going up. That means there's probably going to be a crazy major pullback next year. So as long as your job is recession proof, looks like it's going to be sunny days for a lot of you future homeowners. And now we know the builders are starting to dump these homes. Like I said, as rates stay above 6%, you're probably going to see prices still trickle down. So if it was me, looks like I would try to lock in on something so you can get that deal, okay? Don't wait too long because of the next scene, okay? The next section. Creating more home ownership opportunities. So if you know someone that does not have a credit score, they will be able to buy a home in 2023. Like I said, if they don't have a credit score, they can still buy. With Fannie Mae's new rule that came out on December 10th, it is possible for them to buy. Number one, they're going to pull their credit, make sure they don't have a credit score. Number two, they're going to ask for your 12-month bank statements to verify that you have the cash flow to make your mortgage payment. And number three, they're going to check the DU finding, the desktop underwriting findings. So they tried this back in 2021. But the problem is these approvals didn't have an automated approval, just a manual approval. Builders, sellers, and real estate agents didn't take no FICO score buyers seriously. Okay, so now there will be an automated approval without having a credit score. The one thing that they didn't have on there, which I know they're going to check for, is they're going to check your rent history. They're going to make sure that you can document 24 months of digitally paying rent. That means If you pay through a checking account, through a bank account that's digital, they can pull the records and they can see that the payments are on time. If you did not do that, you can go to Rental Karma and have your landlord report your rent. As long as there's a 24-month history that's on time, you will pass the DU will pass. Okay, so don't wait too long because of everything that's going on. You know, they're releasing more programs to make more to allow more buyers to enter the market. So as we know, we're probably going to have December already had a rate hike. January or February, there's going to be another one. They're going to reevaluate. If unemployment goes up, they might slow it down a bit. They're still going to hike rates till we get inflation probably under 5-4%. Then I'll probably back off because with all the rate hikes, it's still going to cause inflation to come down. But for them to really pivot, probably like no more rate hikes, they probably want to see it under 5%. Probably once it gets into the 4s and 3s, they might pull it back. And when that happens, you will see rates drop. We will see how the United States labor market's going to be. If unemployment stays low, like let's say it stays in the 5 to 6%, you will probably see people still stay in the market waiting to buy a home. If unemployment goes up to like 7, 8, 9, 10%, even with the low rates, probably not going to bring a lot of buyers back in the market. So if it was me and I were you, I would go out and get qualified sometime January or February with a soft mortgage credit pool, right? So that's what's going to happen. So that's how we're ending 2022. Rates are coming down a bit, okay? Unemployment, we were lied to. Unemployment should be going up, which will bring down rates in the future and have the feds back off on rate, okay? And then also, new construction. If you're buying new construction and you're not closing the next 60 days, I would go out and renegotiate. I'm going to go over the strategy in a second. And last but not least, we're probably going to see more buyers, new buyers, enter the market in 2023. Okay, that changed. Another thing that changed in 2022, there's a new regulation where if you have a 680 to 740 credit score with 3% down or more, you're going to get the same interest rate with someone compared to someone who has a 740, 800 credit score and 20% down. They're lifting the loan level pricing adjustment, making it easier to get a lower rate. You can go conventional now. You don't have to wait and go FHA. So with all these new rules, more buyers coming in, rates coming down, more buyers coming in. But unemployment, that's the one that probably slow a lot of buyers from coming in. That right there, guys, is how we're ending 2022. We're ending it with clarity that, hey, something's probably going to happen in 2023, bringing down prices. So you might have a higher chance to get something, okay? So, but go out and get approved. So here are my 2 strategies of buying a home in 2023. If you are buying new construction, I would try to close somewhere after April. April, near the tail end of the year, might be a good time, but you got to get a contract now. Why is it important to get a contract now? First of all, it froze. It doesn't benefit me. It doesn't. Here we go. Hello. Is it moving? Yeah, there we go. First of all, it doesn't benefit me if you go to contract or not. Okay, with builders, you're going to use the builder realtor and the builder's lender. But if you get in the contract now, as rates hover in the 6%, if you want to know for sure, you better watch me on TikTok and Instagram, right? We put up the rates every day. So if rates stay above 6, prices will slowly come down. So that's why you want your own real estate agent, because you want to go back to the builder and keep renegotiating as prices keep coming down, right? Make sure you register at other communities and see their deals. If they're offering you deals, bring it to your builder. So as rates stay above 6, today's back above 6, it's hovering. So people aren't jumping in. That will drive down prices. So if you keep grinding every couple months, you're going to get the price to come down, because no builder wants to lose a buyer right now. Okay? And of course, as soon as they pivot, you already have that low price, you grind it down. Just ignore the builder, okay? Now rates pull back. You're able to lock in the low rate. I'm sure you convince the builder to pay the buy down. So now you have a low price and a lower rate. So if you close sometime after April or until when they pivot, you're going to be able to get the low price and the low rate. That is going to be the biggest win for anyone buying new construction in 2023, is anyone who gets in now but doesn't close till after April, May, or June. Probably near from April till probably October, November will probably be a good time to pick up a new construction home, okay? So make sure you know your closing costs. Remember, there's maxes on them. If you're gonna get more money than that, make sure you get repair, like renovations, price reductions. Remember, you buy new construction, supplemental taxes are gonna be nasty. Okay, so that is my strategy on new construction. Get in now, close after April. Okay, if I am buying traditional, I would get approved sometime January or February. Okay, get a soft mortgage credit pool. Figure out what my credit score is going to be so I can work on my credit and get the best deal. If you want to know what credit score gets you the best deal, you can always reach out to us, 714-790-9697. We'll help you with the soft mortgage credit pool, and we'll tell you what score you need to get the lowest interest rate. So once you get approved, I want you to get approved at 5.5%, 5%, and 4.75. Why do I say that? Is rates going to get 4.75? Don't wait for rates to get down to 4.75 because more buyers will rush the market. But at 5.5, you're going to do a 2-point buy down, and now you're going to be able to qualify with a 4.75 payment. Okay, so you get more buying power, lower rate, lower payments, and you get qualified. So when the right house comes up, you can jump on it. Don't wait till rates get too low because more buyers will come in. Right? Check the Federal Reserve economic data. If you see homes being bought again, you got to jump on it. If rates go up under 5.5, I don't think sellers are going to help cover some costs. So you want to get an at 5.5 so you can still get the seller to cover some costs. All right. So that is how we're going to end 2022. We have clarity that, hey, sometime next year, we're probably going to see a pivot. And those are the two strategies I would use to buy next year when the market pivots. Okay. Get into new construction right now. Get soft mortgage credit pool if you're buying traditional. All right, guys. Hopefully this information helps you guys out. Let's get some Q&A. Not that many, so we'll just jump in really quick. What's going on, Robert Chambers? Yes, a payment of $737 would shave off almost $100,000 in buying power. Right now, with today's interest rates, for every $400 a month, that's $50,000 in buying power. So $800 a month would be $100,000 in buying power. So if you do have a car payment, it does affect how much you can afford to buy. Okay, hopefully that helps you out. All right, guys. I really appreciate everyone who watched and supported the channel in 2022. Thank you so much. Hopefully we brought you guys a lot of value. I can't wait to go into 2023 guns blazing. Okay, I might do a Q&A next Monday. If not, because of the holidays, I'll probably do it the following week. All right, guys. We want to end all our episodes with our attitude is gratitude. If you want to get a hold of us, put up our number. 714-790-9697. If you have a loan estimate that you want us to review, send it over at review@whatsamortgage.com. We'll see if we can help you find a better deal. If you got a $415,000 loan amount, Caesar, rate 5.75, take it in a run. That's a solid deal, okay? If I make $144,000 a year, Robert, send us a text message, 714-790-9697, all right? You guys have a great night. Gus, enjoy the day. If I don't see you guys till after Christmas, Merry Christmas, okay? I'll probably see you before New Year's, but Merry Christmas, all right, guys? Enjoy the